2016 is off to a busy start with headline-grabbing exchange mergers and acquisitions, an ongoing focus on regulation, and the continued search for growth. John Lothian News sat down with key exchange executives to get their thoughts on the changing landscape and what's on their priority lists for the rest of the year.
2015 was probably the first year of the London Metal Exchange in full flight after the acquisition. So obviously it was a full year of LME Clear, and the so-called commercialisation of London Metal Exchange was the first really full year of that as well. Right now, this is against the backdrop of a market that 25 to 45% reduction in prices, risk capital leaving the market, consolidation, people losing, closing mines, losing staff, etc. So against that background, we ended up doing pretty well. I think our volumes were down slightly year on year, but we did commercialise, we changed our pricing schedules to a more commercial level. We've now fully insourced all the technology, and of course a full year of LME Clear. So for every $100 we earn in trading revenue, we earn around 42, 43 in clearing revenue. So for the business as a whole, this pays for further investment in what we're doing. The real challenge now is to look for more products and more things to push through the machine. We've insourced the IT, built the clearinghouse, upgraded the foundation of the exchange, and now we must look forward. And that means really two things: extending the client base into different kinds of users and extending the number of products. And thirdly, I suppose, extending geographically with a major focus on Asia. From the clearing perspective, we're looking to clear flexible contracts now, OTC Flex and others, and that's a big area of expansion. For us, obviously, we're strong in base metals. We're the market leader in base metals. We're looking at precious metals. We're looking at transportation. We're looking at ferrous metals, so that's steel and things like that. So adjacent markets. Adrian and the team have really been looking to expand the services in the latter part of last year into this year to include the use of warrants as collateral. So if you have a warrant from the warehouse showing you the material, you can post that now as collateral for the underlying position. It's a fantastic thing for the industry. Secondly, compression services, so that people, because we're a forward market, you don't realise the cash immediately. By compressing the forward trades, it makes it more capital efficient for users. Thirdly, we've started RMB clearing, so one of the first exchanges to take RMB as collateral for trades. A number of firms are taking that up, and clearly offshore RMB, the two centres of Hong Kong and London, they happen to be our two centres. Looking forward, an environment where the market is not in a bear market, where perhaps over time trends higher. Of course, volatility is always going to be there, and for exchanges that's not a negative, as long as you have the right risk parameters, which we think we do. And so I think if we can continue to add new products, new markets, new participants against the backdrop of a better market environment, and continuing to work on the opening up of China, because that's a very key thing. China's 40% of world production and consumption, so obviously that's an area of interest to us. And we have a very large team in Hong Kong, in Shanghai, in other areas in China and in Singapore, focusing on Chinese flow. Chinese members, their increased business year on year is the highest of any group. So, we're very positive about that.